Hey, my name's James Nicholson and welcome to my YouTube channel. The Federal Reserve has just done a very, very large cut in interest rates. This is good news, positive news for UK interest rates. We've got the Bank of England meeting tomorrow. So in this video, I'm going to talk about how much has the Federal Reserve cut, what that means for UK mortgage rates, what that means for tomorrow's Bank of England rate, and much, much more. There's in fact a real indication on where the path for interest rates is going to go. And why this is important to us in the UK is because we often, there's a term, follow the Fed. The UK, the Bank of England, normally follow the Fed. They bucked that trend in August and did cut rates first, but maybe this gives us the green light to have some big cuts coming in 2024. So before we jump into this, as always, if you haven't done already, subscribe to the channel over there and hit the bell notification. I'd love to hit 30,000 subscribers by this weekend. We're so close. You can see around this video how close we actually are. And smash like, tickle like, do something to the like button. That really, really helps with the YouTube algorithm. And just gets more views on the channel, I'll be honest. So take a moment. This is a celebratory video. So, the Federal Reserve has cut, and it was a big cut today, just to be clear. So, the expectations were, a lot of people were saying that the Federal Reserve is going to cut by 0.5 percentage point. That's been kind of baked in for about a week or so, and that's exactly what happened. So we got that 0.5 percentage cut. Now, why that's important is whatever they were going to start at indicates what they're likely to do next. So if they went down 0.25%, if they had done that, the likelihood would be that the next meeting and the following meetings, we would go down 0.25%, 0.25%, 0.25%. That'd take a while to really bring these higher interest rates down. But we went for half. So we're now looking at likely that we will go down 0.5% again and 0.5% next time as well, which is interesting to see because they will have planned out where they're planning rates to get to. And if they start slowing down, it would show the markets that maybe they went a little too far and dropped the rates too much. So it's likely that they will stick on that route and we'll see some more 0.5 percentage point. So I've got some notes here. So I listened to Jay Powell's meeting afterwards. He got grilled quite aggressively by the American press. That's what they're like. They really go, not as reserved as the British press. They do go for it over there. And what was interesting was, these are the things that they covered anyway. So if the labour market, so employment, gets worse in America, they will cut faster, was the language that they use. So if we get some jobs reports out that say unemployment's creeping up, which it did in one of the recent ones in America, if that happens again, rate cuts will be bigger. So maybe they're indicating that they might go a full 1% or 0.75% down, which would definitely help a lot of people. Also, a very clear thing here is if inflation does drop faster, which they think maybe could happen, they'll cut rates faster again. So very quickly in that press conference, 2 questions, and they're already saying in both of the answers, if the unemployment gets worse, they'll cut faster. If inflation is better than expected, they'll cut faster. Both of those questions, they're talking about cutting rates faster, which indicates that is where they want to get to. Now, their goal is to now not focus so much on the inflation stuff. They feel there's still a little bit to do with inflation, but their main focus now is maximum employment. They were very clear on that. That is what they want to achieve now, is maximum employment in the US, and that is done by lower rates, by a good economy. They feel the outlook for the American economy is still good, it's still robust, it's still pretty strong, not really expecting a recession anytime soon, but that could change. So right now they're not planning or not expecting a recession to creep up, which is good. They were asked, are they behind on interest rate cuts? Should they have cut before? Because maybe they should have cut 0.25% in July, the end of July, July 31st, when they had their meeting. And they did kind of admit that potentially they could have cut in July. And if that had happened, we would have had 0.25% then and probably 0.25% now. So that was interesting that they actually fessed up about that. They said, look, yeah, maybe we could have gone in July, but it doesn't really make much difference, they believe. So how much did they cut? Well, they've gone down to 4.75%. They have a range there, so it's 4.75 to 5%. The UK is at 5, so it's 4.75 effectively for comparison. So 0.25, 0.25% cheaper than the UK, which is good. And because we normally follow the Fed, the Bank of England could tomorrow cut rates. Most people think that's unlikely now. Most people think that we will wait. But I tell you what, if they cut 0.5% in their next meeting, we will be doing some big cuts for sure. We will definitely do a 0.5% cut at one stage. If they cut 0.5% again, and we're at that point nearly 0.75 behind on them, we are going to cut because that would indicate that the pound would get quite strong in that scenario, and we don't want that. We want to keep the pound fairly stable. You don't want it to surge one way or another because we import a lot of stuff and we export a lot of stuff, and the manufacturing companies in the UK wouldn't do great in that scenario. Now, here's where we're expecting interest rates, the base rate at the Federal Reserve to get to in 2024. This is good, 4.25%. So at least another 0.5% down before the end of the year. Now, they have to be a little cautious because they do have quite a big election coming up, and it's very political, it's very divided, the nation over there. They really don't want to get embroiled in that, like the UK, the Bank of England didn't want to when we had our election as well. And so they have that caution there, but the expectation is by the end of 2024, Americans will have a rate of 4.25 or less. Is the indication. Now, their inflation peaked at 7%. Their inflation at the moment is down to 2.6, which is higher than the UK inflation still. So they did not have as high inflation as us. They did bring it down initially quicker than us, but they've stagnated. They've struggled to get that final bit of inflation beaten and bring that down to an acceptable level. So look, this is a good meeting for us. Even if we're in the UK, we are intertwined economies. We're in a worldwide economy now. Our currencies are intertwined. So we are likely, before the end of the year now, to get some big interest rate cuts. This is what this signals to me. I think tomorrow, I'm hoping that the analysts are wrong and we get 0.25% down. I don't think we'll go down 0.5%. But I think there's a chance that markets are saying it's not likely, but I think there is a chance. We didn't think the August rate cut would happen. And we also know that the Americans are going to be cutting bigger, faster, and more consistently this year. So the Bank of England could easily cut tomorrow. Hopefully they do. If not, I do think that we should also keep an eye on the mortgage rates. Because at the end of the day, who really cares what the Bank of England rate is or the Federal Reserve is? We care what your mortgage rate is. And I think it'll be very interesting. I think on Friday, I predict on Friday, you will see some lenders that off the back of this will cut some rates because they want to get scooped up in the news cycle. It's good marketing if you're a lender to cut your rates around this time at different times to different lenders so you get the publicity to yourself, because you will get loads of free publicity then about cutting rates, free advertising effectively. And I think some lenders will cut on Friday. That's what I think. Anyway, could be wrong. Let me know your thoughts in the comments below. 2 videos today. Go and check out this morning's video about the inflation data. Do like this video, guys. It really, really, really helps with the channel growth. And let's get to 30,000 subscribers. Do check out all the other videos and content on the channel, including this video right here.